This video is created by Jagrat Creation. It is on dissolution of a partnership firm. I wish to solve one sum here before you. Look at the sum on the screen. This is the sum which I intend to solve here before you. X, Y, Z are the partners of a firm, XYZ and company, sharing profits and losses in the ratio of 4:3:2. Following is the balance sheet of the firm as on 31st of March 2008. This is the balance sheet: fixed assets, stock, debtors, cash in hand, capital XYZ, general reserve, creditors. Partners of the firm decided to dissolve the firm on the above said date. It was found that the credit purchase of 20,000 in January 2008, this is March 2008, has not been recorded in the books of the firm. Fixed assets realized 5,20,000 and book debts 4,40,000. Stocks were valued at 2,50,000 and it was taken over by a partner Y. Creditors allowed 5% discount and the expenses of realization amounted to 6,000. You are required to prepare realization account, partners capital account and cash account. Now these are the accounts that I am required to prepare. Let me start preparation of accounts. This is the details of the sum. Here I prepare realization account, cash account, partners capital account. Now first step, for the purpose of solving the sum, consider the details of balance sheet and copy it at the appropriate place. So capital of X, Y and Z are credited, recorded on the credit side of capital account, balance brought down. General reserve distributed in the ratio of 4:3:2. So if you distribute the general reserve in the ratio of 4:3:2, so 90,000, 4 plus 3 plus 2, 9, 4 by 9, so 40,000, 30,000 and 20,000. This is how general reserve is distributed. The balance of creditors will be transferred to the credit side of realization account because this is the liability that we are required to settle at the time of dissolution of a partnership firm. All the assets to be realized are transferred to the debit side of realization account. So fixed assets, realization account debit, stock in trade, realization account debit, sundry debtors, realization account debit, cash in hand will be recorded as opening balance in cash account. So details of the balance sheet are copied. Now let us start with the adjustment. It was found that the credit purchase of 20,000 in January 2008 has not been recorded in the books of firm. So purchases are unrecorded. So if you record purchases, purchase account debit to creditors account credit, so it's an unrecorded liability. It will be increased to the balance of creditors and after deducting discount as prescribed in the sum, payment will be made to the creditors. So let me do that. So unrecorded liability. So creditors are 3,20,000. Unrecorded creditors amounted to 20,000. So 3,50,000 are the total. 3,40,000 are the total creditors. Paid at a discount of 5%. So 17,000 is the discount. This is the amount paid to creditors. Amount paid to creditors, realization account debit to cash account credit. This is how payment of creditors get recorded. Now remember one thing. This adjustment is treated as unrecorded liability, unrecorded creditors. And after deducting the discount, the payment is made that is apparent in the sum. Suppose that in this sum, if any of the partners is insolvent and the capital accounts of the partners are fluctuating, then you are required to give the effect of unrecorded purchases as a loss and to be debited to the partner's capital account, fluctuating capital account, and after debiting that loss you should work out the ratio of solvent partners for the purpose of distributing the capital deficit of the insolvent partner. This is not required to be done in this sum because there is no insolvency of any partner. Now fixed assets and book debts realized total, bank account debit to realization account credit. So 9,60,000 is debited to cash or bank account and realization account is credited. Stock is taken by Y. Y is the receiver, debit the receiver. Y account debit to realization account credit. So this is how assets are realized and liabilities are settled. Expenses for realization amounted to 6,000. Realization account debit to cash account credit. Now, after realizing assets and settlement of liability and payment of realization expenses, close realization account. Find the profit or loss on realization of assets and settlement of liability and distribute that profit or loss amongst partners in the ratio of their profit sharing. Let us do that. So total of debit side minus total of credit side. So loss transfer to partners capital account 99,000. Their profit sharing ratio is 4:3:2. So 44,000, 33,000 and 22,000 is the loss of XYZ that is required to be debited to the partner's capital account. So X, Y and Z's capital accounts are debited with the loss on realization of assets and settlement of liability. Now you have to close the capital accounts and make payment to the creditors. So total 4,40,000 minus 44,000. Cash paid to X 3,30,000 minus 2,50,000 and 33. So this is the amount to be paid to Y. Z 2,20,000 minus 22,000. So 1,98,000 are required to be paid to Z. Now payment is made X capital account debit, Y's capital account debit, Z's capital account debit to cash account. So this is how cash account is credited with all these payments. Now close cash account. The balance in cash account should be zero because the partnership firm is dissolved. The total cash gets distributed amongst partners. So have a total of cash account that works out to be 9,70,000. Our cash account agrees. This is how this sum gets solved. This is a very simple sum. I have tried to explain you this sum. I feel that you have followed all these things. Thanks to all of you.